So let's do a market update. And, what's the big story with the market? What is the big story real estate right now? Interest rates. So what do you think? Are interest rates high? Who thinks interest rates are high right now? Raise your hand if you think interest rates are high right now. Who thinks interest rates are low right now? Who thinks interest rates are low right now? Isn't it interesting? Well, who's right? I would say you're both right. Interest rates are normal right now. So if you're new to this, if you've been just looking at this real estate thing for the last 3 or 4 years, you'd be like, wow, interest rates are high. No, I would argue interest rates are normal. When I started investing 20 years ago, most of my rental properties are 6.5%, 7.5% mortgages. That was just normal. For years and years and years, that was normal. Right now, for a little period of time there, we had freakishly abnormal interest rates, 3, 4, 5% mortgage. That's not normal. That's freakish. By the history of the world, that's like you'll never see that again in your lifetime. So that was freakishly abnormal by my perspective, right? Now, when I bought my very first house, before I was even a real estate investor, back in 1981, do you know interest rates got to in 1981? Anybody remember? 18%. Mortgages in 1981 got all the way up to 18%. Oh, you think 7.5% is high interest? What about 18%? Holy tamale! Right now, that was a fairly short amount of time, but they were in the teens for a long, long time. But the point is, interest rates go up and down. But a normal interest rate is 6.5%, 7.5%, and that's where we are now. So good news, you're in the right place, right time, and interest rates are normal again. And that's where we are. But your perspective could be a little different, right? Kind of depending on kind of what you've been comparing where we are to today. So when interest rates go up, what happens to home prices? Does anybody know? Do interest rates go up? Do home prices go down? Who thinks home prices go down? Okay, who thinks home prices go up? Okay, who thinks they don't do anything? I would say it's closer to number 3. So interest rates have both upward and downward pressure on real estate. Okay, the first thing you got to understand about real estate cares pretty much about one thing, supply and demand. It doesn't really care about interest rate. It doesn't really care about the economy. It cares about supply and demand. Like 2008. What happened in 2008? 2002, 3, 4, 5, 6, 7, right? Money was free and easy. If you wanted to get a loan, subprime lending, right? If you wanted to get a loan in 2005, you walked into a bank, you said, I want a loan. And a banker, they'd walk up, they'd hold a mirror under your nose, and if they saw fog, you got a loan. That was the loan application process in 2005. And by 2008, all the banks went bankrupt. Surprise, surprise, right? It was a really dumb idea, giving people that don't have jobs and credit income money. That was really, really dumb. But what happened? Okay, so money was free and easy. Right, the builders were building more houses in 2, 3, 4, 5, 6, 7. If you look at the number of new housing starts, off the charts, more than today. I mean, it's off the charts. It was incredible how many houses we were building. And it worked for a while there because anybody could get a loan. So the builders were building like crazy, and the banks were giving out money like candy. And so all the buyers, that even weren't qualified to buy, were buying houses. And it was just crazy. It was a crazy, crazy time. And then in 2008, the banks went bankrupt. The government actually changed the definition of bankruptcy in 2008. Did you know that? That whole mark-to-market thing, that was redefining essentially bank. But by any definition that's reasonable, the banks went bankrupt. And lending just stopped. It hit a wall. It virtually stopped. So all of a sudden, you couldn't get a loan. You couldn't get a loan. And I'm exaggerating, but just a little bit. You were some lending, but it went like that, fell off a cliff. So all of a sudden, the demand just stopped. And we had this huge mountain of supply and no more demand. Okay, and then what happened to prices? Crash, right? And we bounced along the bottom for actually several years, kind of sucking up and soaking up that inventory until we kind of finally got back on a normal trajectory. And that was 2008. Now, what happened in 2021, 22, 23, we're going to look at that in a minute. But, lending is still not easy. So the builders are building more, that's true, but really not as much as we need, and that's interesting. On a national basis, The United States is in a housing shortage. Did you know that? We have 6 million houses fewer than we need for the amount of demand, right? Because people keep having babies and keep moving to the U.S., right? And so we have growing demand, but we're not keeping up with the supply. And when you have a housing shortage, that pushes prices up, right? So we have something pushing prices up. And inflation actually pushes prices up. Everything's more expensive. Building is more expensive. Appliances more expensive. New construction is more expensive. You know, most people talk about inflation like it's a bad word. I actually like inflation because my money is in real estate. I just have a different word for it. I call it appreciation, okay? Because it's the same thing if you think about it, if you own real estate. So that's pushing prices up. But then interest rates go up, and that makes houses less affordable, so there's fewer buyers that can buy. So we have, right, that downward pressure on prices. So we have certain things pushing prices up, and we have other things pushing prices down. And when you put it all in a blender, what's happened? Not much of anything. It's basically flat. So Texas, and I'll go through the different cities in a minute here. Texas, the average house price, year over year is actually up slightly, 2%, not much. But the year-to-date price is down 1%. So it's flat. It's not up a lot, it's not down a lot, it's basically flat. Now the sales volume, the number of houses selling is actually lower. So there's fewer buyers, fewer sellers, and you put it all in a blender and it's flat. So where's it going to go? I don't know. Well, I got some ideas. It turns out real estate is not as hard to forecast, I would say, as a lot of things. Like the stock market, I have no idea. Nobody knows what's going to happen tomorrow in the stock market, right? The economy, I don't really know. Real estate, on the other hand, is not that hard. And the reason real estate's not that hard to predict is because we actually know how many people are having babies, and we actually know how many people are moving to Texas. So we actually know how many houses we need. And we also know how many houses we're building, right? So it's all pretty predictable. We know we're going to need this many and we're going to have this many, right? And then there's a little variability in there. Interest rates go up a little more, right? The demand goes down a little. If the interest rates go up or down, the demand goes up a little bit. So there's a little variability. But if you put all that in a blender, what do most of the experts think is going to happen? Not much, right? We kind of probably just going to stay more or less on the trajectory that we're on. And by the way, I'm not here to sell you anything, right? So I don't have a vested dog in the hunt, right? I can make money in up markets and down markets, and sometimes it's easy to buy and hard to sell. Sometimes it's easy to sell and hard to buy. It's never easy to buy and easy to sell, right? So I'm not here to try to convince you of a particular story. And a lot of people do, like in my opinion, the National Board of Realtors, they're always bullish, no matter what's going on in the market. But tomorrow is going to be better. They're always telling you everything's going to go like that, right? And because they're, trying to sell this narrative that you should buy a home and hire a realtor to buy the home for you. I, on the other hand, I'm a real estate investor, and I like up markets. I like down markets. I actually prefer down markets slightly to up markets because it speeds up the velocity. Of deal speeds. It gets easier to buy. It's been really hard to buy for the last few years. It's getting easier, right? And that means I can do more deals and make more money. But you have to be a little smarter about it, right? Because the market's not going to save you because you can't depend on the market going up. But what is it going to do? We expect it to kind of stay on the trajectory that it's at. And that is not do a whole lot of up or down. Now, here's the thing. Interest rates, who knows, right? A lot of the experts think they're maybe going to creep up a little higher. Maybe the interest rates will go a little higher, or maybe they're high enough. Maybe they're going to stay. But then a lot of people think at some point, maybe over the next year, they're going to start to come down again. If interest rates come down, I can almost guarantee it's going to create a spike in prices. That's going to drive prices up because we have a housing shortage and there's a lot of pent-up demand. Do you have a question in the back? I love seller financing. We're going to talk about seller financing. And, a lot of you kind of are sorry that you missed out on those 3 or 4 or 5% mortgages. It's not too late. You can still get a 3% mortgage. In fact, you can get a better 3% mortgage than the one that was available a couple of years ago. And the way you get an even better 3% mortgage is you take over somebody else's 3% mortgage with seller financing. And when people are motivated, they will let you do that. So yeah, the only thing better than a 3% mortgage is someone else's 3% mortgage that doesn't require your credit to get it. So we'll talk about that as well. But yeah, now there's another thing that's been kind of interesting about kind of the number of houses I said is that are selling is down. So the volume is down, even though prices are pretty much flat. And something interesting has happened. You know, when you look at the houses for sale, it's a mix of new houses and existing houses, right? Resale houses and new houses. And usually most of the houses being sold are existing houses, resale houses, and then a smaller percentage is new houses. But that has switched. That's actually flipped back and forth. And here's the other thing that's interesting, and this is curtailing the supply. Everybody that got one of those 3, 4, 5% mortgages over the last several years, they don't want to sell, right? Because they're thinking, if I sell my house and I'm going to have to get a new mortgage and it's going to be like a 7% mortgage or whatever, right? So all the people that have houses that could be selling their houses, they're just not putting them on the market because they don't want to pay the higher interest rate for the new loan. And so that's limiting the supply, right? And because that's limiting the supply, what does that do, right? That's upward, that's more upward pressure on prices because there's less supply to satisfy the demand. But again, people keep having babies and keep moving to Texas. Now the builders are filling the void, right? New construction is selling like hotcakes, and that's hot. But you know, more news, right? The interest rates have gone up, and the construction loans and lending in general is getting harder, which means the builders are slowing down. And at some point, the builders are going to start running out of money, and that's going to be, there's going to be less building, and that's going to create more shortage of houses, which will be more upward pricing, pressure. So, put all that in a blender, and that's kind of where we're at. This is kind of an interesting chart. This is interest rates versus home prices going all the way back to 1975. From 1975 to 1981, interest rates on mortgages got all the way up to, there it is, 18%. Isn't that crazy? And when interest rates went up, guess what? Home prices went up. And when interest rates came down, guess what? Home prices went up. And when interest rates went up and down, up and down, up and down, home prices still went up. Now, there have been some bubbles in the way, right, and short-term up and downs. But long term, there's pretty much no correlation. So let's dive into some of the different markets. So Texas, we talked about that a little bit. The average sales price of a house in the great state of Texas is, what is that, $423,000. Median is, what is that, having trouble reading here, $40,000. Average price is up 2%, median price is down 1%. So pretty much the market's flat. Now, the statistic that I like more than any other thing, the most, in my opinion, the most important number to look at if you want to look at the barometer for the real estate market is the inventory, months of inventory. What is months of inventory? A couple ways to think about that. One way to think about that is if we just stopped building, if we put no more houses for sale, we just sell what we got and nothing else gets added to the market, how long before we run out? And the answer is 3.5 months. We got 3.5 months of inventory. And by the way, that is also the average amount of time that it takes to sell a house, 3.5 months. Now, interesting, what does that mean? Let's put it in perspective. They say if there's less than 6 months of inventory, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. We still have, by any historical standard, a pretty strong seller's market. So how about that? Now it's not as strong as it was a year ago. A year ago, we had a freakishly strong seller's market, 2.6 months of inventory, but 3.5 months of inventory, that's not a lot of inventory. That's what we consider to be a pretty hot market. Pending sales are down a little bit, active listings up a little bit, and that's driven the inventory to increase a little bit. The number of closed sales is down. Okay, so there's fewer buyers, fewer sellers. The market has contracted. Now let's look at the last 3 years. Okay, 2021 best year, went up 18%. Prices went up 18%, almost 20%. 2022, another great year, went up another 10%. And 2023, year to date, basically it's flat or down 1%. So we had a great run and it's now leveled off. Okay, Dallas. Let's look into some of the individual markets. Dallas is the second most expensive city in Texas. Average home price in Dallas, $514,000, up 3%. Interestingly enough, median is what is that? 400 and I think that's 6,000, down 1%. Now here's an interesting thing. Dallas inventory 2.7 months. And I don't know why. I've never figured this out, but I've been following this for 20 years. For some reason, for 20 years, Dallas has always been the bellwether of Texas. I don't know why. I really do not know why. But if you kind of want to get an idea of what the rest of the state's going to look like a few months down the road, take a look at Texas. Take a look at Dallas. I don't know why, but it's always been the bellwether. Dallas is always the first to go down, the first to go up. It's always ahead of all the other markets for some reason, and again, I don't know why. But what's really interesting is inventory's falling in Dallas. Market number of sales is down, but not much, just 8%. Pending sales is down a little bit. Total active is actually up. So that's really interesting as well. So what happened in prices in Dallas? 2021 up 20%. 2022, another great year, up another 15%. And 2023 year to date, basically flat. So that is the bellwether, Dallas. Houston, here we are in Houston. Houston average price is $420, up a little bit, up, 2.5%. Median price, just like the rest of the state, down a little bit, 0.3%. So almost not even a whole percent, but 0.3%, basically flat. Inventory, 3.3, about the same as the state. Pending sales are actually up, which is kind of interesting. Active listings are actually quite a bit up, which is also interesting. Total sales is down, but only 4%, so not much there. And by any historical standards, still a pretty strong seller's market. Austin, this is not a typographical error. The average sales price of a house in Austin is, what is that, $583,000. Yeah, we did a little research on this, and it turns out that Austin is actually Latin for San Francisco. Yeah. Austin is the San Francisco of Texas. Elon Musk moved in, and Amazon and Samsung and half the Fortune 500s, and they set up their high-tech businesses and lots of high-tech people. There's a mass exodus from California to Austin. It's just a mass exodus. You go to a meeting in Austin, and it's like everybody's from California. It's crazy. And they brought their real estate market with them. So now I will say Austin has the one market that looks a little different than all the other markets in terms of what's happened with pricing. And here's why. In 2021, Austin real estate went up almost 30% in 1 year. And if you look back in 2021, I was investing in Austin in 2021, there were months where there was 0.4 months of inventory, less than 2 weeks. There was literally less than 2 weeks of inventory. We've never seen anything like that. And somebody would put a house on the market in Austin and they'd get 9 offers in a weekend. And the buyers got ticked off because somebody would move to Austin, they'd make an offer, they'd get outbid. They'd make an offer on another house, they'd get outbid. They'd make an offer on another house, they'd get outbid. And then they started screaming at the realtor, what do you got to do to buy a house around here? Just bid 10% more than it's even worth, right? And it was just this crazy frenzy of people buying houses even above the appraised value, right? And that's why you saw that 30% bump up in 2021. It was absolutely insane. 2022, another great year, another 10%. But 2023, things have gone down, and they're actually about 10% down. So over the last 3 years, Austin looks just like the other cities, right? Up about 30%. But with Austin, it went up 40 and came down 10 versus the other markets that just kind of went up 30 and leveled off. So that's kind of the difference. Pretty strong market, 3.8 months of inventory. Closed sales is actually up a little bit, so that's interesting. Actives is pretty flat, but actually up a little bit. Pending is down. I'm sorry, no, it's actually up a little bit too. So that is Austin. San Antonio. San Antonio is the most affordable city in Texas, and average price was at $388, and it's flat. And median price $322, and it's down whoop-de-doo 1%. 3.9 months of inventory. Still pretty strong market, and they did not get as much run up as the other cities. San Antonio is the most affordable city. It's also, I don't know, maybe kind of the most blue collar city. It doesn't have as much kind of high tech and some of the high paying careers that you see in the other major metroplexes. So that's a little bit about what's going on in the marketplace.